because you definitely don't want to be in a situation where you're taking grandma's last $50,000, right? The deal goes sideways and now your deal's opened up to scrutiny. There is a little bit of a trade-off, even in the retail world when you're going after non-accredited versus, accredited, who, might be high net worth individuals that the SEC deems as, sophisticated enough to understand the risks of, some of these private offerings.
Hello, everyone. I'm happy to introduce my friend, my colleague, Jonathan Tavares. He is the managing partner of the Premier Law Group, specializing in real estate syndication, private equity, fund structuring, and securities compliance. He advises the commercial real estate operators and investors on the legal framework. And Jonathan, just, welcome. And I just want to introduce you. If you want to add something in the introduction, I'm happy to have you on my podcast. I know you do a lot of legal frameworks that requiring a lot of GP, LP partnership, and of course, navigating SEC regulations as well. Welcome, Jonathan.
Yeah, well, thank you for having me, Stella. I really appreciate it. Yeah, so as you mentioned, I'm the managing partner of Premier Law Group, and we focus on helping clients to raise capital compliantly, specifically in the real estate arena. However, we do have clients in oil and gas and other ventures like operating companies. But my background actually started on the real estate side, not the law side. So I started as a real estate broker, and I spent about 10 years representing investors before becoming an attorney. And I think that sort of gave me a front row seat into how deals actually get done in the real world. And from there, on the legal side, I trained under Mauricio Raoul, who's the founder of Premier Law Group, and now work alongside my law partner, Bethany LaFlame.
Nice. I like that background, with the real estate and going to law. How did you develop that specific expertise in real estate syndication and securities compliance?
Yeah, I mean, it's sort of like when people, you go to the gym and you see someone who's, very fit, and you say, hey, I wonder how they how they got like that. And it's really like anything else, right? It's putting in enough repetition. So as a firm, we've represented I'd say over 2,000 sponsors at this point, and I personally worked with more than 350 sponsor groups. So that's sometimes multiple individuals and GP groups, and each of those, and that volume of real world deal exposure is really how you develop pattern recognition in this space as an attorney, seeing what works and what doesn't from a practical side, but then also looking at how to best protect our clients, when it comes to the legal side, raising capital, staying compliant with the SEC, state regulators, and also helping GPs to be able to successfully, navigate their offerings, right? Because being compliant is one thing, but successfully raising and being able to operate your assets is another thing.
Absolutely. And you know what? Sometimes you want to make sure that you protect your asset. How does it legally works with the sponsors when you do like a dispute and it's a rise when the market conditions are shift unexpectedly? How do you protect them, your sponsors? How does it work?
Yeah, I mean, from the compliance side, it's the same, right? It doesn't matter how much capital you're raising, or sort of what the deal specifics are when it comes to compliance, right? You still need to provide if you're selling securities, and you're not going to register your offering with the SEC, you've got to find some sort of exemption with the SEC to raise capital. But yeah, I mean, in terms of preparing clients, I mean, the biggest thing is just making sure they know what to expect, right? When they're raising capital. Raising capital is not a simple job. It's not easy. I mean, it's straightforward, right? But there are a lot of steps that go into it, right? That are separate than actually operating your underlying assets. But the biggest thing is making sure that the deal structure, right, that clients have proposed, that they're expecting to implement, is something that is going to be allowed, right, by the SEC or by other rules. So I'll give you one example. One thing that trips a lot of people up is paying capital raisers, right? There's so many people in this space that will bring on co-GPs into their deal to help them to raise capital. I mean, it makes sense at face value that, hey, if I'm going to cut somebody in and give them part of the equity of the deal, one of the biggest pain points and the hardest things when it comes to these private offerings is actually raising the capital, right? And that's a big no-no when it comes to the SEC. Unless you're a registered broker dealer with FINRA, then you cannot get paid a commission or receive any compensation just for raising capital. Now the SEC says, well, hey, as long as raising capital is incidental to your other duties, right? Like you're doing other things. So let's take, for example, like a real estate syndication, right? You're doing asset management. You're part of the acquisition team. You're doing investor relations. You're actually doing real jobs, providing services for that syndication. That's normally fine. But the issue becomes, when you bring folks to raise capital and you pay them exclusively for that. So that's one of the biggest pitfalls that folks run into. I have that conversation with clients every week.
I can imagine. Yeah, there's certain things that you have to make sure that you protect it and you legally safe. There's few steps that probably sponsors should take, simply like legal, to be protected, and you feel like investors feel completely confident when it's committing to this capital. What would you advise for them to do, like a first steps to be more protected?
Yeah, I mean the first thing is make sure you have a team around you when you're going to syndicate, right? And I know a lot of folks say this and a lot of different business ventures, and I don't want to overemphasize it, but when it comes to raising capital, because there's so much compliance around it, it's definitely something you
Right,
don't want to wing, right? And try to figure out once you have a deal under contract, right? You want to have those conversations with a securities attorney, CPA, depending on the asset type, right? If it's real estate, you want to make sure you have a good real estate attorney that understands commercial real estate, right? Like you want to put that team together and have those conversations about, hypothetical deals so you can start to plan, right? Because everything moves so quickly once you're under contract, right? You've got an LOI accepted and you go into due diligence, and then before you know it, your earnest money goes hard, right? And you really need that equity to come in. So what I tell clients is start working on your pitch deck early on, right? Like even start imagining the types of things that you might offer to investors, right? And sometimes you might be speculating in a bubble, right? But it's a good exercise to practice, right? Because I noticed that the pitch deck is something that gets people hung up, right? So if you have
right,
time to start working on it, and then you can just plug and play numbers, right? Because that's all it is a numbers game after a while. Like when you're reviewing so many of these deals, once you finally get one accepted, then it's just a matter of tweaking numbers, whether it's a preferred return, right? Profit split, waterfall, sponsor fees, that sort of thing. But
right.
hopefully you've put the rest of the framework together. But yeah, you want to make sure that you're talking to all the right folks so you can understand, for example, if there's a big tax play, right, in your syndication. Maybe you're going to do a cost segregation and bonus depreciation. Like make sure you have those folks lined up and tax people, so the things that you're actually saying and communicating to prospective investors are things that you can actually deliver as well. And then talking to the syndication attorney folks and making sure that whatever communications you're sharing with investors are kosher, right? They're compliant. They have all the disclaimers that you need,
Right.
because one of the important things to keep in mind, and sometimes folks don't realize this, is the SEC regulates not just the sale of securities, right? The actual, so people think about, all right, well, when investors sign the subscription agreement, operating agreement, right? Like that's what the SEC is regulating, and that's true. They are, but they're also regulating the offer. So the offer and the sale of securities. So anything that you market to investors, right? Whether it's a pitch deck, it's a one pager, for deals that allow for public solicitation, social media, that sort of thing. You want to make sure you have all those things dialed in, because those are things that can come back to haunt you if you don't comply with whatever the rules are of the exemption you're utilizing for
Right.
raising capital.
You're absolutely right, and especially right now that I see that it's a lot of shift with all these securities regulations and all these rules with the commercial real estate, and the way the operators are being prepared right now, it's a little bit different than before. So, what's your absolute best piece of advice for syndicators getting ready to the structure if their first major, let's say, institutional deal is coming up? I know there's a lot of rules are changing here in New York, but there's any structure that first, before we go into the deal, that you would be advised for them to do?
Yeah, I mean, when it comes to dealing with institutional money, right, that's very different than retail investors. And I will say the majority of our clients do work with retail investors, right? But we do have a handful that have some, solid institutional relationships, whether they be in the preferred equity world or family offices, that sort of thing. And it's really important to keep in mind who your audience is, right, for certain deals. And we do have some clients who, for certain deals, they realize, all right, well, there's going to be an institutional bucket, right, for
Right.
this, or appetite for this sort of deal, and for others, it's more retail investors, and I've sort of seen anecdotally from some clients who tried to merge those two worlds. It doesn't work very effectively, right, in some deals. So sometimes you sort of have to reverse engineer that, right? Because for institutional folks, they're generally writing larger checks, right? They have a different return expectation. They've got a different time horizon, right? Like their goals are different than most retail investors, right? And
Absolutely.
and also the risk tolerance is a lot lower. So the challenge that I find a lot of my clients who do deal with institutional investors, the challenge that they run into is sometimes finding deals that are big enough to get institutional investors to invest in, right? Because they want to write a minimum check size. Now, on the return profile, they may be a little bit more conservative, right? So that might not be as much of an issue, but it's finding a deal for them to get in versus the retail investors, right? Like they might have pretty high expectations. Sometimes it's, from what they saw, a family member or friend get in another private offering, or just what they see advertised on social media, or, on websites that they're checking out for private offerings. But obviously they're going to be a lot less sophisticated, right? So on the retail side, you want to be really careful, especially if you're raising from non-accredited investors, that everything is buttoned up in terms of your paperwork, right? Your PPM disclosures, everything's super clear, because you definitely don't want to be in a situation where you're taking grandma's last $50,000, right? The deal goes sideways, and now your deal's opened up to scrutiny. There is a little bit of a trade-off, even in the retail world when you're going after non-accredited versus accredited, who might be high net worth individuals that the SEC deems as sophisticated enough to understand the risks of some of these private offerings.
Right. When you play with the big numbers, it's risky, and
Yeah,
some
yeah, it does.
ways.
Yeah.
That's why it's like,
The work is the same, right? Like you put in the same underwriting, you're doing a lot of the same things in terms of due diligence. So it's just a numbers game, right, for bigger deals. And it's the amount of work that you're putting into some of these bigger deals is maybe marginal, right, compared to the smaller deals. You're still putting in the same amount of time, but the process looks a lot different in terms of conversations with investors, right? Like the more zeros, for sure, yeah, you're definitely increasing risk. There's no way around that.
bigger game, bigger risk. You know what? Until it's gonna
Yeah,
pass the diligence process, it's like, everything is in the air. And I feel that with the
right,
commercial, it has to be at the closing table, then we know that the deal is coming through. It's a lot of phases that
exactly,
we have to go
exactly.
through, and just
Yeah,
comparing with the residential real estate, I've been for within 20 years, and now doing commercial, it's a different game. Like you said, it's all about the numbers. It's all about if the deal makes sense and to put the right strategy. But I feel the most important is to have the right team. When you have the right attorney, you have the right, syndication, you have the right, everything has to go to places to work with the right people. In here, it's one wrong move and the deal is just going sour. So I'm just saying that, in real estate, every deal is risky until it's not going to get to the closing. It's all about the team with who you're working. And if we can make the process nice and smooth until the end, that's the win-win situation. But sometimes it goes sour. And especially when I'm comparing my residential, real estate, within 20 years, it was ups and downs. But when we do commercial and it's not going the right way, it's a big risk.
Yeah, Stella, with your experience over the last 20 years, I'm sure you could write a book about all of the various experiences, right? Of deals that went great, deals that perhaps didn't, right? But no, you're right. I mean, it's never a done deal, right? Until you get to the closing table and pass papers, and that's a hard concept for people to understand, even in retail real estate. Never mind in commercial real estate, but commercial real estate is just there's
It's
so many moving pieces, and it's unfortunate because sometimes we work with clients that it's just part of doing business. You put in a lot of time and resources into deals, and sometimes they don't pan out, and that's sometimes what folks don't see, right? I mean, sometimes they look at that GP split and they say, "Wow, you're making so much money on this deal, right?" As the GP and
right.
fees and all these things, but they're not considering all of the time that it takes to get just past the acquisitions, right? And
Oh
sometimes it's
my
not that particular asset they're investing in, right? Like you may have spent time reviewing hundreds of other deals, maybe you were in contract for other deals, right? And actually got through due diligence, but couldn't actually pull the trigger on closing. But
God. Yeah,
sometimes as a GP, that's what you have to do to not only protect yourself but to protect your investors, right? Because at the end of the day, you don't want to put folks in deals for the sake of putting them in deals that are not set up for success. So
absolutely. Jonathan, you're just talking my language right now. I can write the book with all these, stories.
yeah, yeah,
Before the deal is going to the closing table, it's like there's so many obstacles that we have to overcome. But when the attorney see that big check and handling to us and saying, wow, that's a big cut, I would say, you know what, before that cut, before this big check, we had so many obstacles, we had so many, bumps that we had to make sure that it's going to be a nice and smooth transaction. So people don't see what's in the background. We just see that, you're getting this big check. But it's a lot of, what can I say, expertise, experience, and obstacles that we had to go through in order for us
right.
to get to that point. So, right, about the book, I do have a book, but I feel that, it has to be next chapter in my book, all,
Yes. Yeah.
stories that I
Or
have
maybe
to
you
put
just spin off a whole nother book on these stories, right?
tell me about it. Success is all about going through that to get that finish line. But that's what got me into this moment, and I'm very proud where I'm standing right now. I feel that the more I can help people to invest and create that cash flow, the more that successful I feel. It's all about making others people's dream a reality. That's my goal. And what you're doing, Jonathan, it's amazing. You know what, it's very, how can I say that, it's important to have the right attorney, the right guidance, the right process. So I feel that to have the right person to do that, it's amazing. And you are amazing in what you do.
Yeah, I appreciate that. And no, you're right. And one of the things that we find with folks who are raising capitals, sometimes they say, "Hey, you know what? I'm just going to go to my business attorney or my real estate attorney to drop the documents for raising capital." And it really is a distinct area of the law, right? Securities compliance. It's people think about what we do as, "Oh, well, you're a real estate attorney," right? When I talk to folks, and sometimes depending on whether they're in the real estate industry or not, I just sort of let it slide. But the reality is, no, I'm not a real estate attorney, right? I'm a securities attorney. It just happens that most of our clients are real estate operators, right? And they're raising capital, but there's a distinct compliance piece, right? Because on the real estate side, right, you're thinking about the transaction, the actual conveyance, you're thinking about loan agreements, that sort of thing, which is a whole world in and of itself, right? And then raising capital is something entirely different, right? So it's not something where you just spin up some template docs that your real estate attorney has and call it a day, right? Like there's compliance rules. You have to understand the compliance exemptions. You don't get yourself in hot water, whether you're doing a 506B raising from accredited and non-accredited investors, or 506C raising
Absolutely.
just from accredited investors, and then know what you are allowed to do, what you're not, right? Which of those investor groups can I take? Am I allowed to advertise my offering? What am I allowed to say? What am I not allowed to say? Right? And then what need to actually be in my documents to protect me as far as the disclosures, the subscription agreement, and that's always a changing area of the law too. So you want to make sure that you're working with folks that understand those things. Same thing with the tax side. When it came to bonus depreciation, that's changed over the last several years too. So you want to make sure that you're working with folks that are acutely attuned to what's going on in those specific areas of compliance, whether it's securities, tax, real estate.
Absolutely. You know what? You just have to be with these changes and be on top of the game. That's important, as well. Well, Jonathan, if there's any advice that you can give to our investors, with the syndication and security, more than welcome to share, and we will go from there. So, Jonathan, as we know, it's very important to have the right professional involved in the deal. When you have the right attorney, right securities, right syndication, that's what makes the deal more easier and running smooth to the closing. What's your thoughts about that?
Yeah, no, 100%. As we talked about a second ago, you don't want your to hire a real estate attorney, right, who dabbles in securities law, right, or securities attorney that dabbles in real estate, right, because those are distinct expertise fields, or fields of expertise, I should say. And so you should get the right professionals for each of those pieces. Same thing on the tax side too, right? There's a joke that as an attorney, sometimes we get all the tax questions, and the tax people get all of the legal questions, right? And so sometimes folks don't know, which professional asks which question to, right? And that happens frequently, especially for clients that we work with, because there's a lot of nuanced issues that sometimes straddle the legal and tax side. So sometimes it requires the combination of the two, right? So you want to make sure that you have experts in their respective fields, because sometimes you got to bring the minds together, right? And have a meeting of the minds to figure out what needs to be done. I mean, some deals are simple, but I feel now that post COVID, there's a lot more creativity going on with how deals are structured, how deals are operated, the partnership groups. There's nothing that's cookie cutter anymore, because it's just you can't add value like that in the market, right? So those are things that I think are even more important than they were before, right? Because securities compliance isn't about just spinning up the right documents and replacing names and addresses, parties to agreements. It's much more than that, right? Especially with some of the nuances involved with specific deals, depending on the asset types you're buying, right? The risk factors involved, the business plan that you're planning on executing, and everything else in between.
Yes, you're right. You know what? I had one deal that he took his cousin as an attorney. His cousin is a big attorney, but it's not in real estate. He's not a real estate attorney. And I said, "You sure you want to continue with your cousin? Because I feel like you have to hire a real estate attorney." And you know what? He didn't listen to me. And in the end, the deal was not done. And he told me, "Stella, you know what? I lost 6 months of my time, and I feel that, even relative, it can be sour and ruin the relationship, but, I just lost the deal because of that." Sometimes we don't want to listen, but, I feel every professional opinion, it's count. This is important to have the right professional guidance.
Yeah, that's a good point. And in that example, right there, you're mixing two things, right? Like, so you're sort of dabbling in an expertise that maybe you don't have, right? If you practice in one field, it's like going to a pediatrician, right, with a really nuanced heart issue, right? No, you'd go to a cardiologist, right? Like that's their area of expertise, right? So just because they're a doctor doesn't mean that they have the right skill set or knowledge to address whatever the issue is that you have. It's the same thing in the world of attorneys, or other industries, right? But in your example, you're sort of mixing that family element with sort of a general practitioner, right? Mindset, and that can be dangerous. I mean, I will tell you, ironically, there are more clients than I would have thought several years ago. Now looking back, that we have that are actually attorneys. or they were part of the GP team, right? And they come to us not because they couldn't figure out these things over time for compliance, but like anything else, like the time and resources and just not knowing what you don't know, right, is not worth the risk, right? Because there is a lot of risk exposure in this field. And so part of what you're buying, right, when you hire a securities attorney to make sure you're compliant when you're raising capital is you're buying insurance, right? I used to say it's cheap insurance, potentially not cheap, right? But it could be cheap in the long run, right? Depending on, the type of deal and what's at risk. So sometimes I frame it in terms of an insurance policy, right? Because again, the last thing that you want is to get a letter in the mail from a state securities regulator or the SEC
My God.
starting to ask questions, right? Because you've got disgruntled investors who have, made reports and now there's an inquiry. And, even if there is an audit, right, by a state regulator or the SEC, which has happened to our clients, and there's an inquiry that's opened up, which, doesn't necessarily indicate any wrongdoing at all. It's just they're asking questions, right? You then
Right.
have to compile all of the information that they're asking for, right? So that means
Right.
probably working with, probably hiring litigation counsel, right? Going back to your securities attorney, and you're expending a lot of resources, right, to provide the information and paper trail to these state agencies. And at the end of the day, even if you're in the right, have you really won when you've expended all of these resources,
Not
right?
worth it. It's not worth it, right?
No, it's not. And so that's the other thing I tell clients too, right? I mean, don't even go anywhere close to the line, right? Even if it's something that could generate more scrutiny, avoid it, right? Because again,
True.
even if you're found on the right side of things, the time and the resources involved in just getting through these audits. I mean, you think about, tax audits, those,
Oh
I
my God.
remember when I was younger writing
Just give me an example, one example what happened and how did you save them?
yeah. Yeah, I mean, we've had a couple of examples of cases. Well, one is, I'm thinking of a smaller raise here where folks were a GP team was raising capital, and they were raising in a 506B exemption for most of their offerings, which means that they were allowed to bring in non-accredited investors and accredited investors. But the trade-off is that you cannot generally solicit. That's what the SEC says, which basically means that you can't advertise, right? So you can't promote your investment on your website, social media, that sort of thing.
Oh,
Now,
okay.
this GP group did have a pretty significant online presence. Now, they were not advertising their offerings, but they did sort of have a general funnel for bringing in cold leads into their network, and just educating them about what they do in the real estate space, right? The asset types that they invest in, their experience. They had a lot of vertical integration around that asset type. So there were a lot of things that they were able to educate investors on about the real estate space and just investing in general. And one of their biggest pushes was around folks with retirement accounts, right? Which that's common in this space. So many people have retirement accounts that they can either turn into self-directed accounts, or they are self-directed accounts, and they don't realize that they can invest in more than just the stock market, right? They can invest in private placements, they can invest in loans, and all
Right.
sorts of other investment vehicles. And so that was part of their education. And fortunately or unfortunately, there was sort of a group of financial advisors in the town where these folks were in that were actually really seeing a loss to their business, because a lot of these folks were getting educated about these alternative investments with this sponsor group, and they were developing relationships with these folks, and later putting them in their offerings. Now they were doing it all in a compliant way, but yeah, I mean, they were sort of reported to the state securities regulator, and at that point they started asking a lot of questions. Now everything turned out fine, but it was one of those things where we had to provide them with a partner that was a litigation expert, right? That knew how to answer the securities regulator, right? Because the other thing is when they ask for answers about certain questions, you want to make sure that you provide just what they've asked, right? Those answers, and not give them more information than they need so that they continue to dig. Not because there's any wrongdoing, but the thing is like if you dig far enough, like you'll find all sorts of things, right? And they might not be technical violations, but again, just that heightened scrutiny that takes more time, takes more resources, right? Like You're hiring
Absolutely.
attorneys to communicate. You're hiring people internally because they have to compile this information, right? So yeah, really important. I mean, I would say one big lesson behind that is make sure you keep a good paper trail, right, behind any of your business activities, whether you're raising capital or anything else, right? Because nobody's ever thinking about an audit on the front end, right? But it's always on the back end when you're scrambling to piece together information, right?
There was, I can, share my story, what happened to me, because what, talking about the right document is very important. I had a owner of the big hotel in New York City that actually wanted to sell his hotel. And he hired my company, working on that. What happened is we were advertising his hotel. And we did actually came to the buyer table, negotiation was in process. And then in this process, we find out there's another partner, which is a family member that didn't know that this hotel is selling. And he complained to us, to our company, that, we're doing all this advertisement without his knowledge. For us, it was shocking. We were spending a lot of time and assets to make sure that, we get the right buyer for that. And the good thing that we had the document signed with one of the partners, but we didn't know there's another partner, silent partner, that was involved. So this was a lesson for me. Make sure that you know that all the owners are on the same page. Because if one partner would say, yes, go ahead and sell it, and there's no approval from another one, I just wasted my time, my money, and my,
Yeah.
it was stressful experience, but it came to the point, it was a lesson for us.
Yeah, that's huge, and we've similarly had other clients have issues with that when they've been on the buying side, and sometimes think that they're under contract, they're ready to close, and then someone comes out of the woodwork that's part of the team of owners on the seller side, right? We had a situation like that with a client who was purchasing a big parcel of land in Georgia, and they were essentially flipping the land as a wholesaler, but they were putting significant time into due diligence and land entitlements. So they weren't closing on the property until they had all the entitlements, and they were going to do a double close and sell it to a developer. Um,
Right.
but what was happening is they were piecing together actually multiple parcels from multiple sellers to make this deal work. And so there were a lot of moving pieces there. Now they had them all under contract, but one of the sellers decided to back out, and that created a whole stream of litigation around that particular parcel. And it was important because without that particular seller, they weren't able to actually get all of the approvals that they needed to sell at the price that they were looking to sell to the developer, right? So
Wow.
yeah, so and that goes back to, one of the points we talked about earlier. I mean, some of these closings, nothing's a for sure deal, right? Until you get to that closing table. So
But you know
make sure you
what? It's
hedge some of
worth it.
these decisions.
Absolutely, it's worth it. It's
Yes.
like you're playing a jackpot, but I feel that you're doing the right way, and I'm doing the right way, and if we can put together the right people, you can go nice and smooth. So I'm
Absolutely.
so happy to have you on my podcast. We got so much, advices that you can share. You shared with us. I'm looking forward for my podcast with you, and looking forward to have you, in New York as my guest, and just for many, many more success stories. So I guess we'll finish on that line, and looking forward for many, many success stories with you, Jonathan.
Sounds good. Well, thanks for having me, Stella, and really appreciate the conversation.
Thank you, thank you. Have a wonderful day. Thank you for listening to the Stella Top Seller podcast. If building real wealth through real estate is your goal, this is your show. Subscribe and follow me on social media. I'm Stella Shalamova. Keep thinking bigger, investing smarter, and living the top seller mindset. Until next time.